Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Friday, August 18th, 2023. Before we click through all the charts, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Share the content with friends and colleagues and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like the daily Apple report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves on those underlying stock picks. We also offer a 5-day free trial up front. So when you sign up for wickedstocks.com, you've got 5 days to check out everything that we offer on a daily basis. And if you don't like what you see, you can bow out at no cost to you whatsoever. So let's check out the charts. I'm going to start with the big picture, mentioning that several months ago we managed to close above the 168.83 long-term channel top. That is now an objective following the settlement recently below the 181.46 channel bottom. But I'll just continue to emphasize that 168.83 formation, if tested over the next week or two, and it probably will be, can contain selling through the rest of the year. Following a test of 168.83, this market can stabilize and then turn higher and eventually make its way to 224.74 by some point next year. Whether that's Q1 or Q4 of 24, who knows? But I do consider this to be still a long-term objective above 168.83. Now back to this chart. We did about a week and a couple of days ago close below the 181.46 rising channel bottom, which set up a test of the 168.83 level that I just mentioned, preceded by the 169.94 3/8 downside Fibonacci. It's based on the January low against the more recent July high. This upper 160s area able to once again contain selling through the rest of the year, and from here we can turn higher as we move into next year. Now, I don't anticipate it, but while we're looking at this chart, if we were to close the week today, Friday, below 168.83, then we set up for another 3 to 5 weeks sell-off to 152.94, rising two-thirds speed line projected off that January low that itself can contain monthly selling pressures, possibly through the rest of the year, and we're watching that closely, but only unless we close the week today below 168.83. Until then, this is solid bottom picking territory. And if you're a 2 to 3 week swing trader and we test 168.83, you may consider reaching for 183 or 185 out of the money calls. This channel bottom rising daily, that would be a realistic 2 to 3 week objective following a test of 168.83 where we could top out on a weekly basis. You may also reach for, there's a number of levels you could reach for, but if we were to test 168.83 today, well, let me tell you, this 205.28 long-term channel top would be a little lower in value than if you can imagine because it's based on Thursday's low. So if we break into the upper 160s, this 205 becomes more like 203, right? But it will eventually be 205 over the coming weeks. And so the point I'm making is if we happen to test that 168.83 formation today, and we could, then you may consider reaching for 205 or 210 out of the money calls that don't expire for at least 6 months, because I think this then becomes a realistic 2 to 3 month upside objective. These are the upside pivot points as we move into September trade or into next week. 180.93 is a new descending 1/3 speed line, and it's very close actually to the channel bottom that I've already shown at 181.46. I don't expect to see this area today. But let's talk about today while we're here. I've got 174.30. We closed just below this area, but by a hair. It's still a session containment level. If we open below it, we can within the day test that 168.83 to 169.94 region, which you can see here. That is reachable today. On the way down, 171 even can contain intraday weakness, and if we break 171 even, I think you should expect 168.83 to 169.94 intraday. On the other hand, opening at or above 174.30 does allow 176 55. I think we've got that shown somewhere. Is it here? Yes. 176.55. This is actually the upside then. If we open at or above 174.30, or if we happen to push back above 174.30 today, 176.55 is in reach. That's a day trade to the upside, pushing or opening above 174.30. A goes long. You could consider going long to 176.55. And inversely, as I said a moment ago, opening below 174.30, you're maintaining a short position or you're going short into the upper 160s. That is a sort of basic day trade setup. Now, even if we push above 176.05, it merely means 178.03, which is nothing more than this new descending channel top on the daily chart, able to contain session strength. So that is a level that can contain daily buying pressures. And if we see it early enough in the day, I think it's a great short set level because we can quite easily fall back into the 174 handle or lower within the day following an early morning test of 178.03. Closing above 178.03, the 181.46 level, which is preceded by 180.93, becomes an objective for Monday, essentially. Yeah, with that kind of volatility, if we close today above 178.03, expect the 180.93 to 181.46 region. And for those of you who are big picture traders, that would represent an opportunity to sell the market. If you're long the market and nervous about, depends on your time horizon, right? We've got day traders, 3 to 5 day swing traders, 2 to 3 week position traders, 2 to 3 month near term investors, so forth and so on. But just know that if we push into the low 180s over the next few days, it can contain buying into, let's just say, through the rest of August. And from here, we can fall back into the upper 160s. If we close above 181.46, that is a solid buy signal into September trade. And no good reason to be short this market, no longer anticipating the upper 160s. And in fact, if we close above the lower 180s, which also includes the speed line at 180.93, I would expect 189.57 within a week, two at the very most. We can top out at 189.57 for a week, possibly into later September and fall off again. And finally, it would be a settlement above 189.57 that would clearly indicate this 205.28 channel top within about 3 to 5 weeks. So it is stair step on the way up, but the low 180s is our primary resistance now, our primary price ceiling as we move into next week, and below which that sell signal that occurred a week and a half ago below 184, 146 still intact, still anticipating the upper 160s as a level to exit, to liquidate a short position and consider going long. Long doesn't matter whether it's a day trade, 3 to 5 day swing trade, 2 to 3 week position trade, 2 to 3 month near term investment, doesn't really matter. 168.83 long term support. Oops, sorry, it's able to contain selling through the rest of the year. And that is all I've got actually for Friday's Apple Report. I'll be back Sunday afternoon with Mondays. Please click like, share, subscribe, and check out wickedstocks.com. You have a great weekend.